Hey guys, welcome back for your daily Bitcoin update video. This is going to be a short and sweet one. Not really much to report as this market is kind of just going up, down, pivoting around that kind of 23k range. We're going to get into a few things, pulling up a number of tweets, one here from Plan C, and we've got another one here from the Crypto General looking at sentiment, talking about whales and the kind of direction that the whales, sharks, and mega whales balance sheets are going in. We will, of course, dive into Bitcoin. Really, right now, for me personally, I'm happy to kind of sit out of this market. You know, we've been trying to day trade it over the past couple of days to not much success, if I'm being completely honest, because I think the market is really torn. You know, the market doesn't quite know what it wants. Certainly, from an intraday basis, it's really just kind of having this kind of pivotal moment around the 23k range. You're currently holding it. We've said, you know, right now, really, it's a key level to level playing field. And what I'm talking about is, you know, you're above 23k, look towards 24k, you're below it, look towards sort of 22k 50 towards the sort of 22k range. Let's start by looking at the Bitcoin Fear and Greed Index, which is currently sat around 31. This kind of weighs up sentiment, something that I do pay attention to. However, you know, if the majority of people are still feeling fear, kind of gives you an indication that there's still a little bit more room for upside. For me, one thing that I'm looking at for those big shorts, because ultimately I do believe that Bitcoin is probably most likely going to take out the 17k lows and go lower eventually. I think this is very much still a relief rally within a bear market. When you kind of put Bitcoin into the context of the kind of wider macro picture, it's not a very positive outlook. Now, could we be wrong? Absolutely we could. But for me, I'm still very convinced that this market sees lower prices across the board. And of course, Bitcoin is largely going to lead that and dictate it. I want to pull up this tweet from Plan C, great guy to follow on Twitter, essentially saying that, look, maybe this time isn't different. And where we are currently, you know, we looked at the POWELL indicator, we've looked at the Pi indicator, we've looked at a number of different indicators and metrics out there that have historically been good bottoming indicators, and they're all flashing buy in this current zone. We've also looked at the long-term regression bands for Bitcoin. We've looked at the 200 weekly moving average, which is where you're currently sat right now. You've actually reclaimed it and are somewhat holding above it. The issue for me is, you know, you can essentially look at the NASDAQ and go, okay, well, the 200 weekly moving average has held us all the way from 2008. Look at the monetary conditions, look at the environment around 2008 onwards. Markets have essentially just gone up with minor pullbacks, which Bitcoin has sort of felt the echoes of. I believe now we're in a very different environment. I think we are in a recession and it's going to get worse as we progress into it. And this is just a relief rally. If you look at, and I spoke about this with my Patreon members yesterday, if you look at where markets are or the sort of futures Fed fund rate markets, essentially by the end of the year, we've somehow lost what markets are pricing in regards to 50 basis points. This is after Jerome Powell's comments. Also, markets are believing that a pivot is coming far sooner than I think it actually will. And this is what markets depend on: liquidity. Right now, liquidity is getting taken off the table in a kind of mass through interest rate hikes, not just in the US, across the board. We know we had the Bank of England came out yesterday and did a 50 bip interest rate hike. First time since, I think, the 1980s, I believe. This takes liquidity off the table. We now have the Fed moving into actually reducing their balance sheet to the tune of, I think it was something like $2.2 million a minute or something like that from September. So this is going to continue to take liquidity and continue to restrict and be aggressive towards markets. You know, ultimately, I don't think that, you know, this is the start of a new bull market. I really don't. You know, could we just range bound and do something similar to this here? There is the potential, but ultimately for me, I'm kind of almost waiting for that Lehman's moment, which we spoke about. But from an intraday basis, it's very, very hard to call. And you can see this indicator here, which is extreme network capitulation, is and has historically been a good sort of bottoming metric. The issue is, again, just like with the 200 weekly moving average, with the long-term regression bands, with the POWELL indicator, you know, these indicators have been good bottoming metrics in a completely different environment to the one that we are currently in. Let's move on to the Bitcoin's number of sharks and whale addresses are growing since mid-June. Mega whales still lagging behind. So you can see here in the yellow, you have mega whales. In the blue, you just have Bitcoin whales, and you have sharks, which are, of course, a smaller denomination of Bitcoin holders. Here we have sentiment Bitcoin addresses holding BTC between 10 to 1,000 continue to grow in the past 2 months. 2,428 new addresses have increased their positions. So we still see whales continuing to distribute, even though we see, mega whales continue to distribute. So the largest holders, we see whales continue to see that uptick, and we see sharks continue to uptick as well. And I think that really reflects the kind of rally that we've seen. You know, we've spoke about the reasons why this rally has actually taken place. You know, it has a lot to do with kind of macro markets. Markets are forward looking and they're trying to price everything in. For me, I just think that they're not pricing in risk. They're pricing in a very sort of stable monetary regime that is driving everything. And it's really what breaks as a result of that monetary regime that I'm paying attention to. And it's why we're very much risk off at the moment. You know, I don't think, and Bitcoin is a risk on asset, that the wider kind of, or the broader financial landscape, it is a good one for risk on assets. You know, what's the main driver of the equity market and Bitcoin and all these other markets? It's money flows. What's happening with money flows at the moment? It's actively being, or what's happening with liquidity at the moment? It's actively being restricted, and in some cases just outright destroyed as a result of what the Fed is doing. So for this to be a new bull market and all these indicators to be right, you need to have the supporting factors there to hold the market up and continue it to the upside. I don't think that's there. I think liquidity, people are going to start running for liquidity, right? Where they're going to get, if you have to choose between paying, and really one thing that I look at is, you know, your everyday people, they're getting squeezed at every point right now, right? So they're getting, their bills are going up, whether that be electricity, their mortgages are going up, whatever it may be. They're going to have to make a choice between making those payments and putting money into markets. It's a very different environment, something that we continue to reiterate from March 2020 onwards, when the Fed had everybody's back. They were pushing money into markets. They were stimulating. They were accommodating. Now they're actually doing the complete opposite. And you've got to remember, in downtrends, you know, and this is very much a downtrend, you have relief rallies. We've seen one. This, in my opinion, is going to be the second. If we take a look over at the sort of 2007 bear market, you can see rallies were frequent, but killed off because of the sort of wider macro stance. Same with any bear market that we've had for Bitcoin and the cryptocurrency space. In my opinion, this is just a similar thing. And this is not what I want to see in regards to bottoming structure. I don't want marginally higher highs sort of struggling to come up. What I'd like to see is something similar to what we saw over in June after the May sell-off, which had a lot to do with China and minor capitulation and a number of other things, where you see you kind of hashing out the lows here. You're sort of building a base, whereas here you're hashing out the highs, you know, in a similar fashion to what you did over here. For me, this is still, in my opinion, likely going to lead to more downside. Let's drop down to the daily. You can see that, again, you are still struggling to make your way back up to that 24K range. We didn't actually have a 3-day, a weekly, or a daily close above, since we came down here and put in this low, above these this 24K range. Clear signs of selling here and pressure. You have sold off. You're now getting some sort of a relief rally. The key thing to pay attention to is really this, in terms of a short-term trend, is very much still an uptrend in the short term, because you've put in a higher low here. Do you now go on and put a higher high in? Potentially, but it's what you do here that is really going to make the difference. Is there a possibility that we squeeze into this range here? Absolutely there is, given just how much sort of invalid price action you've got here. This was a very fast spill to the downside. Typically, you know, when you do form these kind of structures, have these kind of rallies, you will come back into the prior area of consolidation before you had the sharp sell-off. So there is the potential. This is why, from an intraday basis, I'm finding it pretty hard to actually trade it. I'm not going to try and sugarcoat that. Ultimately, you know, we have longer swing plays that we're looking for. But for now, you know, really, I'm just happy to sit back and let this market work out what direction it wants to go in. We are biased that eventually you do see that downside, but when exactly that will be, do we have one final kind of flush to the upside, run all the stops before then taking it back towards the downside? Potentially. you can see that you're in this kind of really interesting area here where you're actually finding support, but running into resistance. You know, you can see this very, very clearly, that this is the kind of area that you're stuck within. So really you want to see either a reclaim to either the up or the downside to get that kind of direction confirmation in the short term. I mean, ask yourself the question, what are you going? Are you going long or short here? I don't think the answer is as clear cut. We're biased because of the overall macro downtrend to going short. But the problem that you've got is right now, if we drop down to the hourly, you can see just how Bitcoin's price action is acting. You know, it's acting very skittish. It's kind of trying to make its mind up. You know, we got out of a number of shorts yesterday that eventually came to be right. You can see where you found that support within this sort of supply and liquidity zone. You're now progressing back up towards here, but you're putting in a sort of swing failure, you know, which leads me to believe, do you come back down here and do something like this? Potentially that is the play. But right now, I'd like to see at least us getting back below that 23K range, which I'll put on here for you. And then that's when you look to take your shorts. If we come up and bounce off this, you know, you're going to do something like this. So it's kind of a bit of a cop-out, me saying, look, as far as an intraday basis, it's not clear-cut. It's not something that's got a high probability right now of going either to the up or the downside. Longer-term time frame, though, I do believe you come and actually run these lows and we start making our way down, you know, certainly down to here, and then we see what happens. And that's without a capitulation event. The real concern for me at the moment is, do we see some sort of capitulation as a result of everything going on, as a result of the kind of market tightening that we're seeing, which is kind of the breeding grounds for that kind of an environment. So watch the 23K level. It's very, very simple right now. You're just playing nice round number to nice round number. You're essentially, if you're above 23K, looking towards the 24K zone, and vice versa. If you're below it, you're looking towards your 22K zone, and in and around there, and target some of these swing lows as possible areas to take profit. But that is all I've got for you in this video, guys. I just want to reiterate a few things. You know, I do believe that this time is different. I don't think you have the Fed behind your back. Markets, you know, let's very quickly take that off. Look at, you know, markets since Bitcoin was born, you know, down here. And you can see that markets have really just gone up and they've consistently bounced off that 200 weekly moving average. You're now bouncing off it again. The issue that you've got is into every recession, you have these bounces before you then spill to the downside. And I do believe we are in a recession, which is a very different environment from 2008 onwards, which was just quantitative easing into quantitative easing. That is all I've got for you in this video, guys. If you enjoyed the content, a like is always appreciated. So is a comment, and I look forward to seeing each and every one of you in the next YouTube video. Have a fantastic Friday, guys. Catch you in the next one.